What is up, guys, and welcome back to the Sweat It Out podcast. Today we have a very special guest, and we're definitely excited for this one. He's an entrepreneur, business owner, the founder of Credit Stacking, helping 500 entrepreneurs get access to large amounts of 0% interest capital. He's going to show us how. I'm excited. What's up, brother?
Guys?
Hey, what's up, brother?
It's great to be here. Super good.
Great to have you on, man. How's your day?
Day's been awesome. Been in Miami for the last week, going to different events and dinners, just networking. It's been amazing.
Well, I know you said you've been here for a while. I know you lived here for 6 months in Midtown, but you're not from here. So let the audience know where you're from.
Yeah, so I'm from California. I was born in California, grew up in Washington State, been on the West Coast. I've lived in Cabo San Lucas for a variety of different months. I'm currently in Beverly Hills. I've been in Miami for 6 months last year. Great run. Love Miami very much, but I love the West Coast just a little bit more.
Hey, you can't blame the weather out there. It's really nice.
It's the weather. It's the weather. Wow. I consider it as, the California weather or the people of Miami. And it's a tough decision for sure. So I just make frequent trips to do the networking, but then, stay over there.
So Jack, tell us how you got into what you're doing today. What motivated you to get you into that industry? And were you always an entrepreneur? Was that always inside of you?
I kind of always have been an entrepreneur. I did sell car insurance when I was in college. I did drive for Domino's Pizza when I was in high school. So I did, I did those jobs that I didn't like, and that helped me ultimately understand that kind of life wasn't exactly for me. My dad was an entrepreneur. He had a small software company, and that really inspired me because I saw how he created freedom for himself and his family. Not necessarily, outrageously wealthy. He had, some money, but it was mainly for the freedom that he could use to go on trips with his family. And that really inspired me. So I studied business marketing at University of Washington. And after that, I started a video production company. And that really, didn't make me too much money. And in college, I was trying to be a professional snowboarder. I was doing contests, and I was making money, but it wasn't, real money.
Damns.
And I was like, all right, so I graduated college. I was trying to be a professional snowboarder. I get injured. I have no plan. So here I am graduating college. I'm actually working a minimum wage job at the snowboard resort, getting paid like $7 or $8 an hour. And then I got injured. So snowboarding's off the table. I was like, okay, I got to do business. And so it was the video production company. And then that led me to a gentleman who was actually importing hoverboards from China. And this was before hoverboards got popular. And so that led me to my first business venture. At that point, and really I want to talk about my progression in business because each business venture taught me a different way to fund businesses, which ultimately got to where I am now, where I have $500,000 in approved credit, and now I'm teaching over 500 entrepreneurs on how to access large amounts of 0% interest business credit. And so that first business venture was selling hoverboards. We were wiring money across the ocean to China. We were waiting multiple weeks for that inventory to come, and we were just self-financing the business. So I had $5K, he had $5K, and it was a very slow process. But we were making massive margins on these hoverboards. We were buying them for $300-$400 and selling them for $1,200. So the margins were epic, but we just did not have much money to work with from the beginning, and so it was a very slow turnover for us. But at that point, I was 20, 21 years old, and that's the only option I knew how to fund a business, was just the hard-earned cash that we have. So it was a very slow grind, and then ultimately that led to our second business venture. And basically once the hoverboard trend started to decline, once they started blowing up and catching fire and getting banned from airports and cities and things like that, we actually went to China. I'm like 22 years old, I think, at the time. We go to China, we go to the largest trade show in the world called the Canton Fair, determined to find the next product, the next viral product. And after 2 weeks of searching multiple different trade shows, actually one in Hong Kong, we found these inflatable loungers that were popular in Europe. Like, they just launched in Europe. We have not seen them in the United States yet. And we're like, let's import these, put our logo on the side of it, and sell these in the States. And we immediately ordered 400. We got on a flight basically directly to Fort Lauderdale, actually, hired some models and filmed these amazing videos. And I've always been kind of into content and branding. So we made these incredible videos to sell these inflatable loungers, like the ones you used to see at music festivals. You don't need a pump, kind of like air hammocks. But we were selling these. And that led me to the second business venture, and the second way I learned how to finance a business, which was an equity partner. So at this point, we still didn't have too much money. We're spending a lot of money, and we brought on a partner that had the money. So we actually, it was a daughter of a billionaire. And so we're like, okay, this is pretty cool. They got a lot of money. They got a lot of relationships, connections. So let's bring her and her business partner on. We actually gave them 51% of the business, majority stake. We were pretty naive. Our contracts weren't that good, but they were supposed to deliver tons of cash, tons of relationships, and ultimately help us sell this product. Long story short, months fast forward, we had to buy them out. And so that was quite the nightmare, completely ruined the company for us. It was just the wrong partner. And so, when I learned that second way to finance a business through an equity partner, it can work, but it has to be the right partner. For us, it was an absolute nightmare. And once that business venture kind of wrapped up, that led me into a travel business with my brother Ted. And we were organizing Cabo spring break trips for university students. And the travel business in general has very slim margins. But on our second year of doing that, we got a business loan. So at that point, we got like a $50,000 business loan, and that helped us get hotel inventory to ultimately help scale the business, help bring more students down to Cabo on spring break, and ultimately take market share from our competitors. And fast forward a year, that company that we were taking market share from ended up acquiring our business. So that was the first experience of me in entrepreneurship, looking at it as like, okay, I can borrow money that can help me scale my business and lead to good things like a six-figure acquisition. For us, it completely changed the way we looked at business or money or financing different businesses or investments. But at that point, we were paying interest, and so it made it that much more harder to succeed because you're paying that 10% interest. You know what I mean? At that point, after the acquisition, I moved to Bali, Indonesia. We were doing Airbnb arbitrage over there. This is before COVID. And then, fast forward a few months, COVID happened, completely smoked the business. Bali doesn't let people travel because of COVID. And we just, lost tens of thousands of dollars on these villas in Bali because we had to pay for them up front with cash. Long story short, good experience, but the business didn't work out. And that's business. They don't all work out.
Happens in the moment.
100%.
Business happens in the moment.
You will go through problems, and sometimes they're not solvable, and that was one of them. And that at that point, it was we completely had to pivot. And I asked myself, okay, with COVID happening, what are the two best industries that we can get into, or what's the one or two we can get into? And that, for me, in my mind, that was e-commerce and consulting. So at this point, I was getting pretty good with credit. And I wanted to teach people on how to finance their business with business credit. And so when I was in Bali, I was able to get a business credit card. And my first business credit card was only a $5,000 limit, tiny limit. Now I'm getting $50,000, $75,000, $100,000 business credit card limits. But the first one was $5,000. And at that point, I realized what the bank was looking for in terms of the underwriting team and checking all the boxes off to get these big limits. And then I was able to start teaching other people. And the two main reasons why I became successful with credit so quickly, because one, I started teaching a lot of people, so I had more data points to see what exactly was working and what wasn't working. And then another thing was getting in touch with these high-level business relationship managers that is essentially the bridge between consumers and the underwriting team. So I extracted an insane amount of information from these business relationship managers to understand what exactly the underwriting team was looking for. And if you can reverse engineer that process, which I did, you can get approved every time for very high limits.
Wow. And when you were doing those other businesses that you had, were those e-commerce businesses, like the inflatable lounge and all those things?
They were e-commerce businesses. But what was crazy, we did not fund them with credit. We funded them with debit cards, which is just so unbelievably stupid, in my opinion. So here I am, I'm an entrepreneur for 6 years. I do not know the power of business credit. We're not using business credit. We're using debit cards. We did have some personal credit cards to get some points and sign-up bonuses, things like that. But when I learned about business credit when I was in Bali in 2020, it completely changed the way I look at financing things. And for anyone listening that doesn't understand what business credit is, it's essentially when you can apply for credit with the EIN of the business. And so that allows you to piggyback on the entity type, the age of the business, and the cash flow and the revenue of that business. So ultimately, you get higher limits on business credit cards, and that business credit account doesn't actually report to your personal credit profile. And so why is that important? That's important because the utilization of that business credit account does not negatively affect your personal credit score. So you get a $50,000, $100,000 business credit card, you max it out for your business or for an investment, your score is unaffected because that account is not reporting.
Wow. And during that time, so I have a question here. When somebody, because there's a lot of stigma behind getting debt. A lot of people are scared, especially in business. You know, we've all been there, where you're taking out a 10, 20K loan, starting out a small business, and you're like, what is the best way that an entrepreneur going into either e-commerce, whatever business they want to start, how should they view debt as like leverage into their business? Like, what should be the frame of mind stepping into this to be successful when they take out credit?
It's a great question. And really, when you're borrowing money, you want to make sure it's 0% because that gives you the highest chance of succeeding because you don't have to pay the interest. And of course, only borrowing debt and using it as a tool to succeed. And so using it as a tool to put into things that appreciate or cash flow or essentially make you money, right? There's good debt and bad debt. Bad debt is when you're using money for something that ultimately takes money out of your pocket. So you want to be very careful when investing into things like your business, like investments that ultimately appreciate or cash flow. But I think anytime you're borrowing money, you want to go the route of the 0% interest cards. And generally there's 0% for the introductory period. So this is 0% for usually 12 up to 20 months. And you can also get you can balance transfer that debt to other 0% interest cards. So you ultimately can get 0% interest for multiple years through this.
Because you're cycling it through
this balance transfer strategy. Exactly.
So what are some key things that somebody out there, a business owner, can do right now to improve their chances?
Yeah. So the steps that I always take everyone through is the first step being optimizing your personal credit profile. This is the complete foundation. This is the main reason why people can get approved for very high limits is the foundation that is seen through the personal credit profile. And so generally what you want to do, it's always awareness. You want to check your credit profile. And again, me as an entrepreneur, I didn't check this for the first 6 years of being in business. I didn't even know how to check my credit profile. Super dumb. I had no one taught me. And the thing is about credit, it's not taught anywhere. You have to be proactive. I studied business at University of Washington, pretty decent school. They didn't teach a thing about credit. It's not taught in high school. Right? It's actually DeSantis in Florida. I believe they are going to start teaching about credit, which is just incredible. But you have to be proactive. And so a lot of people don't understand on how to actually optimize the credit profile, which is it's basically hidden information. But you want to make sure your utilization is under 10% on each account, not just an average. You want to make sure the inquiries are no more than 2 in the last 6 months on each of the 3 bureaus. Things like you want to only apply for high limit personal credit cards because there's something that's called comparable credit. So if you have higher limits on the personal side, you're going to get higher limits on the business side. And so we can do that by only applying for high limit personal credit cards that are known to give high limits and also taking advantage of credit line increases. So there's some banks that require a hard inquiry if you do a credit line increase, and others only do a soft inquiry, which does not affect your credit profile. So American Express, Bank of America are 2 of the banks that only do a soft credit check on CLIs, credit line increases. So if you're active on a card that, say, has a $9,000 limit on American Express, you can call them and ask them to increase that limit. And so we want to get as many accounts as possible over that $10,000 mark. Not a requirement, but the more, the better. And then additionally, you don't want to apply for too many personal credit accounts because if there's more than 2 in the last 6 months, it makes it very hard to get approved for business credit accounts. So you want to be very strategic on the amount of personal credit accounts you get. When it comes to applying for business credit accounts, you can do 10 in one day and get approved for over 200,000 in one single day because those accounts don't report to your personal credit profile. And then one more thing when it comes to being strategic about the personal credit cards, I only recommend people to get the personal credit cards at the grade A banks, being Chase, American Express, Bank of America, and U.S. Bank. Correct, yes. And you want to do that for mainly one reason. One, to get the high limits for sure. And then secondly, to build a relationship with that bank through that personal credit card. So for example, all those banks I just listed have 0% interest business credit cards. Citi, for example, does not have a 0% interest business credit card. So if you have a Citi personal card, you're building a relationship with Citi, which ultimately does not have the business credit card product we want. So you're essentially, in my opinion, wasting that effort to build that relationship with Citibank. But if you had that personal credit card with Chase or Bank of America, you're building that relationship with that bank. Therefore, by the time you apply for that business credit card, they're going to give you a higher limit, which is 0% for 9 to 12 months.
Does credit score dictate how much limit you get?
It does. It's one factor of it. Yeah.
It's one factor of it.
Generally, you want to be 720 and above. Anything above 750, it's kind of all the same. If you're above 750, you're strong.
So do you work with individuals who want to get themselves out of a credit problem to then be able to qualify for these things?
Like consolidate debt and all that.
Yeah, I mean, there's a couple ways to go about it. One of the ways is through a bridge loan. I mean, so one of the strategies, if someone has high interest debt on the personal side, you can optimize other things on the credit profile. And if the problem is only utilization, then you can get a bridge loan to pay down that debt on the personal side and then apply for the business credit cards, 0% interest for 12 months. Then you can liquidate that credit into cash and then pay off that bridge loan. And so essentially you just move the debt from your personal credit cards over to the business credit cards.
Because the bridge loan is also going to have a lower interest.
The bridge loan is going to have high interest.
Okay, higher interest.
But you can do it for 1 to 2 months.
Gotcha.
So in the meantime, you want to optimize other things in your credit profile, build banking relationships, and then when all that's kind of optimized, then it's getting that bridge loan, paying down the utilization on the personal credit card, so it's at least under 30%, ideally under 10% on each and every account. And then once your credit file updates, which it updates once every 30 days based on the statement closing date of each credit card, once that updates, then it's applying for those business credit cards. Once you get approved, you can liquidate that credit into cash, pay off that bridge loan. Now the balance is on the business cards, not the personal cards. So now you have 0% for 12 months or up to 20 months, and then now the utilization is not affecting their score. So now they have a high score, and they're not paying any more interest.
It's interesting because the power of knowing this information can really set you apart from making $100,000 a year to making over $1 million. And for a lot of people who are listening to this podcast and they're thinking to themselves, man, this is interesting, I can do this. What about the business owner that's savvy enough and says, hey, you know what? I want to offer this type of service, financing service to my client base. Maybe I have a product that's more expensive. Maybe I'm selling custom-made motorcycles and I want to offer that financing to my clients. Is there a way for them to do that? Like, what would be the approach for them to go about?
So if a company has a product and they want to help their clients get funding, and so there's really 2 different ways to go about it. One, the person that wants to spend the money can learn it themselves. And that's one of the options that I have. So I have a mentorship program called Credit Stacking, which teaches entrepreneurs on how to optimize their credit, how to build these banking relationships, and how to actually how to submit these applications most effectively to get approved for all this credit. In that specific scenario, it would be a little bit of a slower process because they'd have to go in the program, learn it, things like that. But there's also a done-for-you option. And essentially what that looks like, a done-for-you option, is when we can specifically give the customer specific recommendations on their credit profile that they can easily optimize to bump their score up. And then I have a team that actually helps facilitate those applications through our banking relationships and does those applications on behalf of the client or the customer.
And since you have the relationship already, it speeds up the process.
Exactly. I mean, the relationship is everything. Doing the applications through a business relationship manager is the difference between getting a $25,000 card to a $75,000 card. Like, if you go into Chase and apply for a business credit card through a normal traditional business banker, you will probably get 25 to 40 grand on a Chase business card. If you do it through a business relationship manager, which is a much higher level individual at these banks, you'll get 50 to 75K.
A quick question, since you would know more, but you would sometimes hear like, hey, look, some of these medium, smaller banks, you can build a better relationship, probably get a bigger business loan compared to some of these other banks. Is that a recommendation, or do you still feel the bigger banks are better to be able to get those the money that you need? It's
a great question. So I like to start at Chase because Chase gives the biggest limits, and they're generally pretty generous, between 50 and 75K per card. Then I'll go for some of the other top banks like Bank of America, American Express, and there's easy ways to get those limits increased as well. After that point, I'll move to the regional banks. And then one of the big strategies is understanding what banks in each state that you can apply for these credit cards and lines of credit at that don't actually verify any income verification, no documentation whatsoever. And so some of the best banks in the country are in New York and Pennsylvania. And so a lot of times we'll actually file a foreign filing from wherever state they're doing business in into PA or New York just so they can get access to those banks. And then once they have access to those banks through that foreign filing, then we'll facilitate that entrepreneur in actually doing these applications, working with those business relationship managers and facilitating these applications. And that's how we get a few $100,000 approved within 2-3 weeks.
Now, do you think that with the current economy, they're talking about a lot of recession, a lot of things are pivoting, the inflation, is this market or gain this liquidity, is it still going to be viable in the next year to 2 years? Or where do you see the trend going on here, and how should an investor or business owner think about accessing credit?
Yeah, I mean, anything can happen in a recession. Generally, when things like that happen, the banks tighten their lending, right? And so I think it's more important than ever to increasing your purchasing power. Build that credit now, get access to money now, as assets become discounted, you can actually have that money and take advantage of these discounts. Either people are trying to build their purchasing power, or they're already hurting from the recession, the bear market that we're experiencing, and they need money to get out of the hole that they're currently in. So I think there's some serious urgency right now to get access to capital, so when you need it, you have it. And also we're seeing record high limits. Right now, record high limits. 75K cards at Chase, we're getting approved every other week. 50K cards like candy. Like, we have never seen record high limits like this. And also there's record high sign-up bonuses. So the sign-up bonus is when you spend X amount of money in the first 30 to 90 days, they'll give a sign-up bonus, which is generally about, or now record high, we're seeing between 100 and 180,000 points that the banks will give to the card holder when they hit a minimum spend. So the sign-up bonuses are record high and the limits are record high right now.
So individuals listening to that, you got to get it now. You got to get it now.
I would.
Yeah.
I mean, we are.
So for Jack, for you then, let's say, recession comes, depression, what we're hearing is the trends of possibilities, knowing that it's better for the business owner, individual to get that right now. What would that do for you, for your business? Like, where will you pivot your business, your credit stacking business, what you're doing with your clients, the automating it? What would you do as far as pivoting for that?
Can you actually say that one more time?
Yeah, so like, let's say, I know you're saying for the individual who wants to get the credit, do it now. And then you said just because when that happens, the banks are going to tighten up. So for you as the person providing that service, where do you feel that you have to pivot?
I think the service and skill that I have helping entrepreneurs get access to capital is only more valuable when things tighten up. Everyone needs money. Getting access to money helps every single entrepreneur. And to have that skill, and for someone to learn that skill is only more valuable when times get tough. So I've thought about that. If we run into a recession, if things get really bad, where does my service fit in the marketplace? And I think it will only do better, because people will have a greater need to get access to money. Either they have the need to build purchasing power to take advantage of these discounted assets, or they're finding themselves in a very tough position with debt and interest, and they need 0% interest debt to help them get out of that hole.
And where do all these banks have all this credit to give to people, like these limits? Like, I've always wondered, like, where's all this money coming from that these banks are able to give out $80,000, $70,000 in credit lines?
I mean, they're printing it. The Federal Reserve's printing it, and that ultimately gets lended through the banks, and gets into the customer's hands. And ultimately, to get these high limits, like I was saying before, you just have to reverse engineer the underwriting criteria. You have to know exactly what they're looking for, and if you make yourself attractive, that's how you get these high limits. And so to go to the second step. So the first step, we previously talked about optimizing your personal credit profile. The second step is, I like to call, hacking the bank. This is becoming very attractive to the lenders, and we can do this through relationships, and also maximizing the fundability for our entities. So for relationships, I always recommend people to open up business checking accounts at some of the top banks, because they are very relationship based. So if you could open up a business checking account first, put some money in that account, show some liquidity, show some transactions, some deposits, that really helps with building a relationship, ultimately helping you get access to more money. And then secondly is maximize the fundability of your entity. So these are things like making sure your name of the business doesn't sound too risky, making sure your NAICS code, the industry code that essentially classifies your business risk in the marketplace. You want to make sure that's accurate, but you want to tailor it to a low risk narrative. So you guys are in the fitness space, and sometimes I work with some other people that are in the fitness space, and they have a brick and mortar gym, but part of their business is online coaching, which is consulting. And so if they can use the consulting NAICS code, that's a much lower risk category in the marketplace, and therefore they're going to get more funding that way. But if they use the NAICS code of a brick and mortar gym, they're going to get dramatically less funding. So you got to think about, how do you make this code accurate, but tailor it to a low risk narrative based on the operations of your business.
Makes sense. And to, now that we're talking about the coaching and working with a lot of individuals in the consulting space, do a lot of your clients that you're working with, are they actual consultants themselves, and you're helping their clients get a lot of this funding to jump into their programs, into their services, into their products?
That's a big portion of it. But even if you aren't actually a consultant, you can create a brand new entity as a consulting business with the intent of consulting. And because that's a lower risk narrative and a very low risk NAICS code, you can get more funding that way.
So even somebody else who has a different business, you might tell them, hey, you might want to open up a consulting business so that way you can run it through there instead of over here.
Yes.
That's the secret sauce right there, man.
One of many of the secret sauces.
So the NICS code, how's that code? So that code is basically they're assessing the risk profile of the company?
Exactly.
Wow.
So anything that has high overhead is very high risk. Trucking business, restaurants are generally high risk. Anything brick and mortar is generally high risk. Marketing agencies are very low risk. Okay. E-commerce businesses can be very low risk, and consulting are very low risk. And so we look on the NAICS website that has all these codes, and we're very strategic about how exactly we help our members pick these codes. And then basically there's 3 places where this needs to be accurate, this code, mainly 2. The first is on the business checking account. So the business checking accounts, you go in there, the business banker asks you, what does your business do? And they're asking you those questions so they can give you an NAICS code. So I like to tell people, go do this research first, come in there with your code. They're still going to ask you those questions, but give them that code to make sure that they put it in accurately. The second place you got to make sure that code is accurate is on the business credit bureaus. So the business credit bureaus is different than personal credit bureaus, and that's going to be Dun & Bradstreet and Experian Small Business. So when you apply for these business credit cards, they're pulling your personal credit, but they're also pulling your business credit bureaus. And so you want to make sure that code is accurate there so it's all congruent.
Wow, and it's crazy that they don't even teach you this. Bro, you got to figure it out.
So you got to come to Jack, man.
Yeah, go to Jack, bro.
That's why I do what I do. When I learned this, it just completely blew my mind. I was like, if I've been an entrepreneur for the last 6 years, and I didn't know about this, there's got to be millions of people that don't know about this.
Have you tried going into schools?
I want to. I want to go speak at colleges.
So the random
But
thought.
first step is podcasts with guys like you.
There we go.
There we go, bro.
So thank you.
Yeah, of course.
That NIC code, or the code that you just said right now, I just butchered it. Do they use that? The banks use it for like valuation of the business to see what they're worth, and is that any component into that, or no? That's just a separate code that they use just to.
Yeah, not for the valuation, just for just for risk. Essentially, they use that code to calculate the risk, which ultimately helps determine the limit that the banks give you. Yeah.
So what are all the biggest factors for risks?
I mean, the overhead, the amount of overhead, and just the nature of the business. Anything very cash intensive, that's higher risk. And so there's a scale in the NAICS code website that kind of helps you understand the difference. And so that's one of the factors that goes into the limit. The second is the entity age, and then the entity cash flow, and then the banking relationship. And so even if a business has had a ridiculous amount of cash flow or like past revenue, it really matters what the cash flow is looking like at the current moment. Because when you open up a bank account at a new bank, they can't see what the business has made. And generally, they're not doing any documentation or verification of income. So if you have a cash flowing business that's cash flowing moving forward, you want to show that bank that cash flow. So change the deposit account to that brand new business checking account so they can see that cash flow, get that card there, then maybe move that deposit to a different account to show that liquidity and cash flow to a different bank so they start to trust you more, and then kind of go bank to bank like that. There's different strategies on how to apply for these credit cards, and that kind of leads me into the step 3 here. But some other people just like to shotgun approach everything out there. I like to be very strategic, aim for these 0% interest cards, and ultimately get the max limit on each of these 0% interest cards.
And that's for how long? 12 months?
Between 12 and 20 months.
Okay.
Per card.
And once you start using the card, you have to start paying it back, but there's no interest in it.
Correct. And so you have to pay 1% of the balance but it's 0% interest for 12 to 20 months, depending on the card.
Now, what situations have you seen people take these cards out and their business has other than your example you gave of yourself? Have you seen other people use these cards for igniting their business, taking it to the next level?
100% all the time. I mean, I'm teaching 500 people on exactly how to do that. When it comes to like the business operations, that's ultimately up to them. I'm not a business consultant. I just help them get funding for their business. But I mean, you can apply this to any business. If you're running an e-commerce business, you need the credit to scale. If you're running a drop shipping store, FBA, you buy the inventory up front on a 0% card, then sell that inventory. If you're a videographer, you can buy one of those nice red cameras, get the best gigs, then pay off the card. You can start a trucking business. You can use that money as a down payment on a truck, and then cash flow thousands of dollars every single month. I got multiple people doing that right now. Airbnb Arbitrage, you can use that to pay the rent, the credit, or to furnish the apartments or the houses. You can also use it as down payments on real estate deals. You can liquidate the credit, say you get a $50K card, liquidate that credit into cash, and we have strategies that show people how to do that for a very low fee. And then then they have the real estate property, and then a few months later they cash out refi, get all the cash out of it, and then you either pay the card back or then use that as a down payment to another property. So the list, the list is massive. Are
there certain specific businesses that you would say can't necessarily get these credit lines?
So there is, if you seek funding for that business.
Do you know what are a few of those businesses?
Trucking's hard. Restaurants are more difficult. Real estate is difficult for a bank to lend 0% interest credit to a real estate entity is difficult. But if that's the case, then we have them file a brand new entity that's low risk and get the funding through that entity. That's much more effective.
And then they can use that money and then do a fix and flip, take it out, and then they're ready to go.
Exactly. Exactly.
Wow, that's amazing, man.
Yeah.
And then how about in e-commerce? So if somebody's using their cash, do you have like any test examples or any case studies have you worked with that you've seen them use it for the e-commerce that's just blown up?
Yeah, dozens and dozens for sure. I've done it personally. I had an e-commerce company. I was managing over 40 stores, 6 of those stores being mine personally, and each store was doing between $50,000 and $150,000 per month. Wow. And so to do that, you need essentially that much credit to leverage every single month, especially drop shipping or FBA, because drop shipping, you have to essentially front the cost on your card before the platform actually pays you out.
Oh, wow.
And so it's just crucial. You can't do e-commerce without credit. And then also back to if you do have a coaching offer, kind of one of your questions, if you're running ads for that coaching offer and you have a card like the Business Gold that gives you 4x points for every dollar spent. So if it really adds up. And then once you get these credit card points, then there's different strategies on how you can redeem these credit card points and get up to 10x the value of your points. So this is kind of a side topic off the getting the credit, but it's a major benefit of credit because because everyone loves free travel. Entrepreneurs are traveling for meetings. You like to go to these amazing places. Yeah. If you use the points on the portals like the Amex, American Express portal, or the Chase portal, you're getting a value of basically 1 cent per point. But if you take advantage of the transfer partners of these credit card companies, you can get up to a 10x value of your points. 10x.
So trip paid off.
Oh, so many trips. So 100,000 Amex points is worth about $1,000. But if you can take advantage of these strategies and transfer them to these transfer partners and snipe out these first-class deals to different countries or even different hotel deals, you can turn that $1,000 in value to $10,000 in value. It's not super easy. It takes a little bit of work to find these deals, but I have a friend that's partnered in credit stacking that I refer everyone to, and he helps people optimize and help get these deals.
And credit stacking, the term is just stacking different cards or different. Where does that originate from? Credit stacking.
Stacking credit.
That's it. Just stacking, just levering.
Yeah, I mean, this is my book for anyone watching the YouTube video. This is my credit book right here. I got over 50 credit.
I was going to ask you, what is that?
Really cool.
Yeah, I should have flashed it at the beginning, but I got cards that fill this entire book right here.
Wow.
Yeah, and so as you get more cards, you're building your stack, building your purchasing power, and ultimately just putting yourself in a better position. When you walk in a room and you're talking to different investors or people that are trying to make some deals, if you have access to a few $100,000, you can do a lot more.
Leverage.
You're more valuable to other people when you have purchasing power.
Now, when it comes to paying off these lump sums of credit, do you have a strategy, a better way to pay them off, a timetable to pay them off? Can you walk us through that?
Yeah, and so when the introductory period runs out, you want to be looking at the interest rate. Some of the interest rates on these cards, once it expires, is only 13, 14%. Other times it's 26%. And so when you are paying interest on cards, you want to strategize by paying off the highest percent interest card first. So if you have 20K balance on 2 cards, one has a 14% interest rate, one has 26% interest rate, you want to focus on that 26 until it's all the way down, because ultimately you're paying more interest on that card. So look at the card, look at your statement. The statement shows your interest rate, or even the bank app. You want to focus on the card that has the highest interest rate. Pay that down first, then look at the next one, pay that next one down.
And then if you want to consolidate your debt, could you get one of these cards and just pay them all off and then just use that card to pay off your debt?
You could, for sure. Yeah, you could.
You could do that? Even like your student loans and all that stuff?
It depends. I mean, depends what kind of cards.
That is true, though, because if you put that on a student loan, then you got to pay off the zero interest is not that appealing. This is more for businesses.
Yeah.
More for businesses, yeah.
That's really cool. And see, again, this is the knowledge that people don't have. And that's, it's funny because I'm like, man, I wish we knew it at an earlier age. Obviously, we know some stuff, but, what you're doing here is really phenomenal for a lot of entrepreneurs and business owners out there. And it's, obviously, I'm sure it's changing the game and changing lives for a lot of these people. What would you say is, for any entrepreneur out there, what would you say is the biggest first thing that they have to look at if they want to get ready to work with somebody like you, as far as like maybe what are your requirements that they would need to pass to be able to start working with you?
I think there's 2 things you want to look at. In terms of requirements, it's very simple. It's having a 650 credit score. If you have a 650 credit score, I can help you get more credit than you know what to do with. That's the only requirement, 650. If you're at 650, there's easy ways that I can teach people on how to get them to 720, and that's what we need for the applications. But 650 is the only requirement. Even if you don't have a business, that's no problem. You just file a new business. We'll show you exactly how to do that. We'll show you exactly how to build the strategic banking relationships with the right banks, understand what cards to apply for, when to apply for, and then we'll facilitate those applications through our relationship managers. But before that, you want to ask yourself, what's your goal? What do you want to do? Do you want how much money do you want to get access to? Why do you want access to that money? And ultimately remind yourself, what's your why, right? Do you want to grow your business? Why do you want to grow your business? What do you need to grow your business? Do you need capital? Ask yourself these questions to understand your intention with everything. And then even if you're not in a position where you need the capital now, there are certain things you want to do to optimize and get yourself ready. You want to be, if you need money, you want to be ready for it. And some things do take time. Some people happen to be in a good position where they can see epic results in 30 to 60 days. Like I'm talking hundreds of thousands of dollars in 30 to 60 days. Other people have not looked at their credit much, don't understand it at all, which is totally fine. It just takes a little bit longer. And what I tell people and what I'm confident is credit stacking, the unique framework that I've created, is the fastest possible way to get access to money. Doesn't matter where you start, it's the fastest way.
And does this apply to international? So if somebody's in the UK or in Canada, can they also do the credit stack method or no?
It's more difficult, for sure. If you have a social security number, that's all you need to access the United States banking system. If you have an ITIN number, that can give you access to the United States banking system. But if you don't have those 2 things, it's a little bit more difficult. You can get American Express cards, which do have really good charge cards, really good 0% interest business credit cards. And I do have some people that are from both Canada and the UK in credit stacking, but unfortunately it's just a little bit more difficult to them, which actually leads me to another point. If you're an American, you have a social, you should take advantage of the resources that you have as an entrepreneur.
So you have more perks over here.
You have so many more perks as an American. We have the best resources as entrepreneurs in the entire world. And I think it can be a disservice to yourself and your business if you don't take advantage of these amazing resources. And I don't blame you if you don't know anything about credit, anything about business credit, because I didn't. Yeah. 2.5 years ago, I had zero idea. And I figured it out. I'm teaching 500 entrepreneurs, and it's changing a lot of lives. When you're able to build your purchasing power and scale, when you have access to more money, I think you have a higher % chance of succeeding. You don't need money. I think you need access to money. And I found the easiest access by far through 0% interest business credit.
It's a really big point.
And this access to credit, so there's no, I guess like anybody can access it. Any, demographic, any background, anybody with no income. They just have a drive. They want to make money. it doesn't matter where they're at. They can get the access to the capital with the right education, working with you, and they're able to just dive in and just blow up their business.
100%. The information that you submit on the credit card applications, it's an honor system. There are specific data points that we know works very, very effectively. If you have cash flow in your business, that obviously helps. If you have an aged business, this obviously helps. But we are getting people who are literally 23 years old, just graduating college, over $200,000 of 0% interest business credit. His name's Lauren, went to ASU. He's 23 years old. He had a brand new business within 6 months. We got him over $200,000 of 0% interest business credit. 23 years old.
23 years old.
Yeah. And I'm like, all right, Lauren, like I just helped you get a lot of money. You got to promise me you're going to be responsible. And he's crushing it. He started an Airbnb business. He has e-commerce stores. He trades Forex. I think like one or two other things. And he had a corporate job that he wasn't liking. And he got to a point where his investments were making enough money that allowed him to quit the job that he didn't want to work.
Have you ever had an experience with somebody take this money and use it for the completely wrong things?
Not for the completely wrong things, but there have been investments that don't work out. And, you know, that's part of it. I've had investments that didn't work out, and, you know, that it makes it quite tough, you know. But I think when you have, you know, a 0% card, that gives you 0% for 12 months. So it does give you some time to pay it off. And then because it doesn't affect your personal credit score, you can always get more 0% interest business credit to give yourself, you know, a bigger cushion, essentially.
Yeah, for anyone listening, do not take out this money and buy a Lamborghini.
Unless you're going to rent it out on Turo.
Unless you're gonna rent on Turo.
Hey.
Good debt. We're borrowing money to make money.
So what's the biggest message you can leave across to people to understand in a basic, simple term, good debt versus bad debt?
Good debt is when you're borrowing money and investing that into something that is helping you make money in terms of something that's cash flowing or something that's appreciating in value, which will ultimately put more money back in your pocket. If you're borrowing money to put into something that ultimately takes money out of your pocket, that's bad debt. If you're using money to go to college and you're not even using that degree for your job to make money, that can be considered bad debt. That's why a lot of people drop out or don't even go to college because they don't use that degree.
True.
Buying a Lamborghini just for fun, that's bad debt. That does not put money in your pocket. There might be small ways like, the marketing, et cetera, but that's a hard argument. So we're very specific about using the money. I mean, they can do whatever they want with it, but my advice, my recommendations are use it for, you know, good debt purposes, things that will help you make money.
Amen.
And what are the most common things you get from people and maybe why they're hesitant or a little scared to jump on this credit stacking program, that you can let them know, that you can talk to them and maybe handle some of these objections on here, because obviously everybody needs this. So what are some of the commonalities you hear out there of people saying, man, I'm hesitant. What is it?
Yeah, and so really before I answer that directly, I think the three most important things that people can focus on to be successful is investing into yourself, investing into your network, and learning how to get access to money.
100%.
And I think when people start investing into a variety of different things, all these passive income opportunities before investing into yourself could be a mistake, because at the end of the day, if everything goes to crap, you have yourself. You have yourself and your skill set. And so I think, you know, you want to join courses, you want to join mentorships, you want to increase and, you know, sharpen up your skill set. And that's exactly what I had to do when COVID wiped out our Airbnb business. I had to sharpen up my skill set. I had to learn new skills, and ultimately, you know, that got me to new heights. And so before, you know, using money and debt for these investments and everything, you want to invest into yourself and your network. You know, I come to Miami all the time, literally just to network and meet people. And it's a balance. You can't only network and not have a skill. You can't, you know, you get an incredible skill and have zero network. There's a balance. So you have to focus and ultimately invest into both. And so I'll spend, you know, I just spent $55,000 a couple weeks ago to join a mastermind group, essentially to get in the room with these high level individuals so I can network, learn things from them, provide value, ultimately, you know, help, you know, think a new way and get myself to the next level. And then the third point was just learn how to get access to money so you can help accelerate everything. But the question exactly was why, you know, what hesitations do people have? One of the hesitations people have is, you know, I don't know where I would put $200,000 once you help me get approved for it. And so one of the things we help people in the program is to provide opportunities where people can invest their money, whether that be into Bitcoin mining operations, e-commerce stores, We have different ideas and different education. I always bring speakers onto our calls, teach them about things like Airbnb arbitrage, Turo automation, trucking businesses, things like that. But generally, someone needs 10 to 20 grand to start a business, and then that can help them make money, help them scale. But generally, people don't have the idea on how exactly do I start a business. One, you need capital to start a business, and then two, you need the idea. And also, a big part of credit stacking is the community. We have 500 entrepreneurs or aspiring entrepreneurs. These are people where you can get ideas from. These are people that you can partner with. And so to get yourself, back to what I was saying, get in the room, this is getting in the room with other entrepreneurs that you can get inspired by and ultimately, help level yourself up. So the community and your environment, I think, is so important.
Oh, 100%. And I think people need to be more aware of their environment, the people they're hanging out with, because you're only one connection away from changing your life. Mm-hmm. And I want to ask you, for you, what was that one connection other than your dad that you admire, that one person that opened your eyes and you were like, wow, this is amazing?
It was probably my first business partner, Jared Getz, and that's who I did the hoverboards with, and that's who I did we called them Dumbo Lounge Sacks. He was a few years older than me. Ultimately, met him through this video production job I had at Yik Yak, the old social media app, and he was just very dominant in business and very driven. And it was really cool to learn from him, to watch him negotiate with people and lead the meetings and things like that. I think he was 3 or 4 years older than me. So he was not only a business partner, but a mentor. And so to be in business with someone of that level, I learned a lot from, and I was able to bring that, that knowledge to other business ventures.
It's amazing, brother. And look, as an entrepreneur yourself, bringing this light to more entrepreneurs is very valuable and it's needed. So we appreciate you, for sharing this information with us today and, allowing individuals to be able to get access to you, man.
Thank you guys so much. I appreciate this opportunity. I was DMing you so much. I was like, let's make this happen. I'm literally flying out tomorrow, and I was just on the Ryan Pineda podcast, and that was the first in-person podcast I've done. This is the second, and so I really appreciate the opportunity. And my goal with platforms like this is to really give as many tangible strategies as possible, inspire people, show them what's possible with business credit, things that I didn't know for the first 6 years of my journey in entrepreneurship. So I appreciate this opportunity.
Anytime, brother.
Thank you,
anytime. Where can people find you? Where can they get access to you, connect with you?
Yeah, 100%. My Instagram is the best, King of Debt. King of Debt. My name is Jack McColl on Instagram. I just came out with a book. It's on Amazon right now. If you go to my Instagram and click the link tree I have there, you can see the link to my book. It's on pre-order right now. Maybe by the time this show is live, it should be ready to rock. The book's $18. It's a great deal, and I spent months and months and months to put this book together, and there's some serious value in there. And then for anyone interested to possibly work with me in credit stacking, there'll be a link in the show notes. I think you can click that link and schedule a call with someone on my team to see what that process looks like. And then for anyone that's interested in just a done-for-you funding route where my team will actually just facilitate those applications for you with very little effort, just shoot me a DM on Instagram, DM me funding at King of Debt, and I'll give you some more information.
Amazing. Great stuff. So real quick question for you. For anybody out there who wants to get the book, what are the 3 biggest things that they for a fact are going to learn to be able to start applying right away with that book?
They're going to learn how to get their scores above 750 in a very, very effective and fast route. They're going to learn how to build very strategic relationships with the banks, which will ultimately help them get access to business credit much faster. And they'll understand what cards they have access to them based on the state that they live in, have a better understanding when to apply for those cards based on what their credit profile looks like and how to apply for these cards. There's different ways to apply for these cards, and if you do it the correct way with the right information, you're going to max out your limits.
Guys, you heard it for $18. Look at those 3 big things right there, and I'm sure there's a lot more. For $18, you cannot beat that. So go get your book. Brother, last question. What is the biggest piece of advice you can leave off to all our listeners today in one single sentence?
Build your credit.
You heard it.
Build your purchasing power. It makes yourself more valuable in any single room if you have more purchasing power. Sometimes it takes a little bit to do, and credit is a lifelong journey. It's like tax, right? You deal with that your entire life, and it's something that you evolve and you consistently learn and develop that skill. And that skill is one of the most important skills as any entrepreneur. The skill to be able to raise money, get access to money so you can use that money to start new businesses, scale your business, or just have extra capital to fund different investments.
Love it. Guys, you heard it. Start leveraging, start growing, start changing your life and other people's lives around you. Man, that was powerful. Guys, you had it. Jack McColl on the podcast today. We appreciate you, brother. If you guys got value out of this, we appreciate if you like, comment, subscribe, share, drop a rating, leave a review, because the more love you show us, the more love we can show back. Till next time on the Sweat It Out podcast.
Thanks, guys.